Hey guys, it's Jojo here, and I'm going to be doing a trade breakdown on USDJPY on how I caught this particular buy, which gave me a 1:6 hour. So I'm going to, it's more like a candlestick pattern that I spotted that I used in taking the trade. Then I had to go down to the lower time frame to look for more entries. So yeah, let's get into it. But before I do that, if you're new to my channel, I would like you to please subscribe and turn on post notification for more videos. So let's get into it. So basically, I'm going to go to the, as you can see, USDJPY is actually, let me go to the 4-hour time frame. It's actually bullish, so like and which means we are bullish totally. So this is the recent price action going on, and in this place now we know that this is the previous. Let's start from here: higher high, higher low, higher high, higher low. Then this is higher high, then we expected the retracement, a higher low, then we're expecting a new high to break a structure. So that's it. It has actually broken structure. So now that that's out of the way, let me go down to the main thing, which is this particular trade. So on this trade, there's this candlestick pattern called a tweezer bottom. They have the tweezer top and the tweezer bottom. So it's something like this. Let's say we have a candle, a bearish candle that is very long. Let me indicate that that's bearish. Let's say we have a bearish candle. I'm using red now, but mine on my own chart is black. So let's say we have a bearish candle. Let me just use black. Black. So we have a bearish candle, and the candle opened around this region. And let me put it at the week. Yeah, so now this is a bearish candle, and we have another candle coming close. When this candle opened, it went up. Buyers came in and pushed, sellers pushed price back and sold to this point, to this lowest point. Then buyers came in to push back, but the candle closed. Then another one will open. So now a tweezer bottom is when the candle opens. The next candle that is open is still on the same line as the previous candle, and the next candle that is opening is a bullish candle. So we have our blue, a bullish candle, but this is the catch. The next candle has to sweep the low of this particular candle. It has to sweep the low of this particular candle, and that's a tweezer bottom. So if you're going to take the trade, your trade is going to, okay, this is not on the same line, Seth. Let me redraw it. Good. So if you're taking a trade using this pattern, this candlestick pattern, all you have to do is put your entry, your horizontal way around here. Then you just have to put your entry there. Then your stop loss should be below that particular entry, should be here. Your stop loss should be below here. So basically, if this particular candle now, this week here, if it is long like this, you have to extend your stop loss to that level below it. You have no choice. So that's why most times this particular pattern does not give like a reasonable risk to reward. It's just something small. So you have to like put your stop loss below there, and price will The next candle that we open will definitely react there, then go to the next high. Either it targets the next structure or where that liquidity is resting, because that's where the market heads to. So now that that is out of the way about what a tweezer bottom is, let me show you guys how I cut the trade. So sorry about that. So now on the 4-hour time, on the H4 time frame, I noticed that market was reacting from an FVG, and this FVG that it was reacting from, like the market actually was coming down. I know it's bullish. So the market was coming down and it got to this point, to this FVG. This bearish candle closed first. So after this bearish candle closed, the next candle still sold. It opened around this region, sold to this point before buyers pushed it back in, and it closed inside this particular range. So let me delete all these things so it will be clear, so you guys will see how the whole thing went. So after the thing closed inside this place, like I marked, this is a sweep. It swept this low, this particular low, and so I already knew that okay, this is an entry point. So I brought out the horizontal ray and placed it there, and I placed my stop loss below that particular level here. Stop loss was below here, and take profit that's subjective high here. To me, this is my objective high, where I know that okay, yeah, market is drawn to, and this is my subjective high. So if you'd want to target the objective high, it's a 1:4, or if you want to target the subjective high, it's a 1:6. So either one, you just go with what you want to. So this was how. Then let me go down to the lower time frame. The confirmation I saw, let me delete this. So the confirmation I saw on the M15 was this confirmation entry. I actually caught them. So on that tweezer bottom thing, if you go down to a lower time frame, you definitely see another block there resting. So as you can see, a sweep, a shift around here. There was a shift here, and after that shift, what happened? There was no liquidity resting close, so the market came and engineered liquidity into the point of interest. After did the engineered liquidity, it started buying, and that's how it bought till it got to this particular level. So if you want to leverage this now using a confirmation entry, you will see that if you put your long here and stop loss below this level like this, and you target that if you target the objective high, you're having a 1:9 ratio. Then if you're targeting the subjective high, you're having a 1:12 ratio. So this is a whooping sum of money. If you leverage this on your MT5 with $100, you'll be going out with $1,200. If you leverage it with $10, you'll be going out with $120. So this is a big. So if you're adding this plus the 1:6, that's the 4-hour entry, that's a 6R, you're going home like with about 1:18 total. So just this trade alone, 18R, just for this particular move. So yeah, that's how I actually cut. But you can also go in and look for more re-entries, continuation and all, depending on how you'd want to avoid missing out on the trade. So that's it. Thank you for watching, and do well to stay tuned for the next one coming up.